All right, so you're thinking about buying a home in Maine. Here's three things that us lenders look for when pre-approving you. So, first is going to be your income and employment. We want to see it to be, we want it to be stable income. We usually look at the last 2 years. And that includes whether you're W-2, self-employed, seasonal work. You have 2 jobs, whatever it is. We want to be able to see that you have good working history. Number 2 is going to be your credit score. Now, this is where a lot of people get stuck. We don't just look at the score, we look at the history. We want to see a score. So having no debt ever is bad. So if you're young and you don't have a credit score currently, you've never taken out any debt, it's time to take out some cards, do something to get a score, because we want to be able to see that you have good payment history. We usually look for scores in the mid 600s and higher. The higher you get it, the better terms you have, the better loan programs that are available for you. So it's really important that you keep track of your score and make sure it gets up. If it's right on the edge and it's like, let's say high 500s, the best thing you can do is paying off those credit card limits along with keeping up good credit history. So if you have, 30% usage, a lot of people hear, 30% usage is good. You really want it to be 10% usage for that score to skyrocket. And that should, after a few months of keeping that usage down low and payment history is good, should bring you into range where you need to be. And number 3 is going to be your debts. And then I guess we'll loop assets in there. So we're going to look at your down payment. There's plenty of programs out there, especially for first-time home buyers in Maine. MaineHousing, for instance, that's a really good one that's popular. That'll help you out with the down payment, but you still don't want to have $0 in your bank account. You're buying a house. Banks want to see that you have some money to be able to support you over the next few months and make sure that if something does happen, you have a little fallback money. So saving up a down payment's important. It's important not to have it in cash. So you want to have it in a bank account. Cash can't be traced. Stuff in a bank account can't be traced. So don't move money around. We can go more into that in another video. And then your debts. So basically, every debt that you have, we're going to take a look at the monthly payment. And whatever the monthly payment minimum is on that, that's what we're going to subtract from what you're pre-approved for. So it's important to keep your debt as low as possible. Before you go ahead and pay everything off, I say it's best to talk to me first. Because if you talk to me first, I can tell you, what debts will help your score, what debts will hurt your score, which ones are most important to focus on. Pre-approval, super important to get started early. You can start, your best case scenarios, you start before you get into all the, doing all of these things if you want to know where you're at. But you can start with your credit score, start with making sure you have good income. And then after that, you can hit me up and we can see what we can do to get you pre-approved. And just because you get denied being pre-approved right away, it's not necessarily a denial. It's just, here's X, Y, and Z. Here's what you need to do to get where you need to be, when you need to be there. And let's get you into a home in Maine. Thank you. And please hit me up. I don't get paid by YouTube. I'm doing this to give support to people and help guide them along the way. So if you have any questions, you're looking to buy a home in Maine, please give me a call. I'll put my number down below and talk soon. Thanks.